Alright, what's happening, guys? Welcome to another episode of Sensible Investing. My name is Jesse, and today we're going to be continuing our look into China. And it's going to be a very exciting video because we have a lot of topics to cover, so sit back and enjoy. Now, before we get started, just wanted to again reiterate that none of what you see on this video, or this channel for that matter, should be construed as financial advice, and before buying anything at all, you should always do your own research. Okay, guys, so we've got some really exciting topics to cover today. And what I really wanted to focus on is just how out of proportion this whole trade war fears and economic slowdown, all of this nonsense has been blown up to, and really focus on what's actually going on, what this whole trade war actually means in the greater scheme of things, and that if you look at a really solid company like Alibaba, for example, and you think about the long-term picture, then you're actually going to be okay. So the topics that I've prepared for us today, first of all, I'm going to spend a very quick minute just going over the trade war chronology. I'm not going to drivel on that for too long because, I'm sure you guys can do the research for yourselves. Then I'm going to discuss why I believe the fears are overcooked and why I think this massive machine, this juggernaut of a country, China, is very hard to stop, and especially by something when you compare in the greater scheme of things to China, something so small as this trade war. I just think the fears are overblown. Next, we're actually going to cover China moving their economy and their entire sort of model from from manufacturing to services, which then actually effectively turns them into a consumption economy like the USA. So that means things like spending increases, spending power increases, more people in the middle class, more wealth, and why that's actually a good thing, not necessarily a bad thing. We're then going to cover the tailwinds that's going to propel, I believe, Alibaba forward for many, many years to come. And then we're actually going to look at, well, what's Alibaba worth? What's its intrinsic value? How do you actually value a stock like this? At what price do we get it? And then finally, we're going to do some competitor analysis. Now, I call it competitor analysis because a lot of people think that the likes of JD and Pinduoduo are competitors with Alibaba. Now, my argument is that they're not, but for the sake of, I guess for the sake of just doing it for the sake of it, I'll still do an analysis on them and really show you the differences in their business model and why I think there's really very little to threaten or disrupt Alibaba for at least the mid to long term. Okay, guys, so let's get into it. Now, if you guys want a really quick chronology on the US-China trade war to date, just pop over to Wikipedia and have a read. It's about 2-3 pages long, and it gives you a really good summary of how it started, what events have what events have materialized to date, and what the potential consequences or implications are, or assumed consequences or implications. Okay, guys, so back into it. So now that we've covered the chronology, I wanted to tell you why I believe that China is an unstoppable machine. So when I think about the country, the first image that comes to my mind about China is this. And so if we actually look at the numbers, right? So we look at the number of online shoppers in China, the disposable income increasing, how much the middle class is going to grow and the upper class and their spending power, and what e-commerce and retail and buying stuff online actually means for China, we'll actually see that this whole trade war thing is really just a very small piece of the entire picture. And as you can see over here on the top right hand corner, I mean, if we just look at how much the upper middle class is forecasted to increase, and then if we look towards the bottom here about, how much extra disposable income is going to come into this new upper middle class and this new wealthy class, and then the comparison of retail e-commerce sales worldwide, just because of China's population and how that's going to continue to grow, and then the number of online shoppers, we really start to get a sense that perhaps this whole trade war thing, these fears are overblown. And the best way that I can portray that is if we actually look at how retail sales and e-commerce as a percentage of retail sales has grown, we'll actually see that the rate at which it's growing is still massive. I mean, yeah, sure, it's not growing at 50% a year, but growing at sort of 25, 30% when it's exceeding $1.5 trillion. I mean, that's really something to take into consideration, right? So, okay, let's move on. Now, let's talk about China actually going from manufacturing to services, right? So, low wages, long hours to, I guess, still long hours, but much more pay. And so, let's have a look at some comments from the Alibaba latest conference call, right? China lost 14 million manufacturing jobs, but then replaced them with 70 million service jobs, right? And if we then look at the actual population of the middle class in China, it's almost the entire population of the US, and that's going to double, right? So 600 million people with a lot of money in the middle class, and a lot of them are actually coming from these tier 3, tier 4, tier 5 cities, which, are considered sort of rural, impoverished cities no longer, right? So their spend, or their capacity to spend and consume is going to pretty much triple in the next 10 years, right? And now you guys might be saying, well, okay, maybe this is just Daniel Zhang, and that's their CEO. It's not Jack Ma, by the way, who runs Alibaba, right? Jack Ma started it, but Daniel Zhang has been running it for a very long time. And you guys might be saying, well, look, maybe this guy's just talking a lot of shit to get the shareholders excited. And you could think that. However, now I couldn't find even more recent data than this, but if we go as far back as 2015, you'll actually see that this is not a lie, right? Service jobs have increased exponentially, and that was 4 years ago. So can you actually imagine where it is today? And then you can then compare this with actually the manufacturing jobs, and you can see they're either stagnating or are in fact decreasing. So I actually think there's a very valid basis to what Daniel Zhang's saying here. And again, just a bit more information in terms of how much services currently contribute to the Chinese economy. You can actually see it's 50% of the GDP for 2 years in a row, and that was as of 2016. Again, I couldn't find any more recent data than this. And now, I guess you can say, look, to be considered as a first world country or a rich economy or whatnot, you need to have 70 to 80% of your uh, income from services. But then if we actually look at what the actual GDP of China is, 50% of that is still pretty much more than 98% of all countries in the world, right? So we have to again look at it in terms of scale and in terms of actual ability to consume and then the growth of disposable income. Okay, so let's move on, right? Let's talk about these tailwinds that are in Alibaba's favor. Let's talk about the tier 3, tier 4, tier 5 cities that's going to propel not only China's growth moving forward, but Alibaba's. So let's talk about a study from Morgan Stanley, okay? And let's actually talk about some of the key points in here. So the lower tier cities make up almost 60% of China's population. GDP, and 73% of their population. Now, if what Daniel Zhang says is true, and that the lower cities will double in the next 10 years, then you can actually imagine what that means for China's private consumption, right? It's going to be huge. And so just having a look at some of these numbers, right? Private consumption could increase from 4.4 trillion to 9.7. The future will be older and more tech savvy, which means that they will engage with e-commerce more, all in Alibaba's favor. Household disposable income will go up to 8.7K from what it is today, which I think is no more than like 2 or 3K USD, and internet penetration will increase. So these are all massive tailwinds going forward if we actually consider Alibaba's business. And we'll actually talk about that a little bit later in terms of the business segments, the business model, etc., etc. And so this is the Morgan Stanley forecast for when China is expected to achieve high income status. And as you can see, even if it's a little bit delayed, in the most bearish case, it's still going to get there in a very quick fashion. But then in the bullish case, it's just going to go through the roof, right? So again, we have to look at all of this in context. And again, the rural areas were growing faster than the urban areas. So just keep that in mind, right? Because all of these manufacturing jobs have to become service jobs, right? Because that's the way that China is going to want to drive their economy moving forward. So these are all the tailwinds. And similar to what I covered in my previous video about Weibo, which is the Twitter of China, and you can find that in my channel. I'll include a link for it below. You can actually see the disposable income exponential increase year over year in terms of disposable income, ability to spend, and ability to consume. Okay, so let's now talk about, intrinsic value, right? So because this is this big term floating around. I mean, how do we value Alibaba? What's it actually worth? What's a fair price to pay for it? Now, there are quite a few variables, but what I am going to do is talk about their numbers, their growth, my conservative model for forecasting their growth, which I believe is, on the low side, and then talk about some of the tailwinds in their favor to let you come to that conclusion. So as you can see, Alibaba listed back in 2014, and they've been in hyper growth mode. But what's interesting is, their margins are actually getting lower and lower year on year, despite their revenue growing at an exponential rate. Now you can say, well, these guys are getting less profitable, but I think the right way to view it is that, they're still in its infancy. They're building an ecosystem to not just be very profitable, but they actually want to. It's almost like world domination, right? If you think about it. And so they forecasted at least a 33% growth in FY20. And what I've done is I've then just used a 20% EBIT margin and a 20% net margin to sort of just try and forecast. And I know it's very difficult to forecast accurately, but just to, I guess, try and give us an indication of what we think the EBIT and net profit after tax is. And then I've applied subsequent 27, 22, and 20% growth. Again, I think this is very conservative. But again, it's better to be conservative than to buy too early and then be I guess, holding the bag, right? But, this actually assumes that their Alibaba cloud unit will continue to be loss-making, which again, I think is very unlikely. And this also assumes that Alibaba's other loss-making units will continue to be heavy loss-making. And again, I don't think that's likely because they are quite savvy investors. And it actually hasn't factored in, Alipay, right? Which I think is huge, and we'll talk about that later. But let's talk about cloud for a second, okay? So their EBITDA margin for cloud went from -8 to -2. So as you can see, it's getting very close to being positive. And if we actually then look at Amazon's cloud business in comparison with Alibaba's cloud business and actually try and project the trajectory, you'll see that Amazon's cloud business is far more profitable than the core business. And in fact, it's massively profitable. And going forward, it's probably going to generate a lot more than the core business, 5, 10, 15 years from now. And I think this is what Alibaba sees, right? They see this opportunity and they're like, okay, great, we got to capture this opportunity, and we got to dominate this market, right? Because this is actually what's going to drive our margins moving forward. And so, as you can see, Alibaba keeps reminding the investors, stop viewing this with a short-term mindset, right? Because, and again, we have Daniel Zhang here saying, look, the trade war actually isn't that big of an impact in the greater scheme of things. I mean, we've got cloud, we've got Alipay, we've got this entire ecosystem of, online to offline, we've got this retail ecosystem, we're enabling businesses. And really, they're just reminding investors to take a step back and actually look at what they're building. And I would actually agree with that, right? So then this begs the question, well, what are the, what are we actually willing to pay for this? Um, and so my target entry price, again, this is just not financial advice. My target entry price is about $135, and the reason being is because I believe that 5-10 years from now they can still command a premium um, for their shares. So I believe that they will still trade at between a sort of 25 to 30 times earnings multiple. Um, but the thing is, the earnings are going to be a lot more, right? So I actually see their margins growing and going way back up once cloud gets up and running, fully penetrated, many clients, extra services, ongoing renewals, long-term contracts. Okay, so let's now talk about why I believe Alibaba has a superior business model, and then following that, we're going to analyze its competitors, JD.com and Pinduoduo, and why I actually believe they're not that much of a threat to Alibaba. So let's first of all look at some numbers, okay? So Alibaba's uh, online retail, wholesale, call it whatever you want, it grew 33 and 31% versus actually the Chinese overall market for the space only growing 21 and 23, okay? And they've also, so the way that they portrayed it, unlike Amazon, because Amazon wants to take over the world and Amazon wants to own everything. Whereas the way that Alibaba have portrayed themselves is that they want to be the first place that any brand comes to when they want to grow, right? So they want to be the enablers of brand. So if a luxury brand like Moet Hennessy, for example, tries to launch in China, they want to be the only people to come to for them to enable them to go to China, right? So they'll manage the whole ecosystem. This brand doesn't need the marketing costs. This brand doesn't need the people on the ground. All this brand needs is Alibaba and their product. And so if we actually think about how we scale that, like that's scary how much potential there is, right? And so okay, so let's talk about the next segment, right? So cloud computing increased by 70%, 76% year on year. And according to Gartner, it's actually the leading provider of cloud services in Asia Pacific. And what's even scarier is, as of today, Alibaba serves over half of all listed companies in China, right? And that's early days. So can you imagine what that's going to be like in 5 years from now? And can you also imagine what it's going to be like 10 years from now? And then it might not just be serving companies in China, it might be the rest of Asia, Asia Pacific, right? So the potential is limitless. Okay, and so what I wanted to talk about next is the ecosystem that Alibaba is building. So unlike Amazon, Alibaba doesn't want to own everything. Alibaba wants to enable everything. And actually, that's where I believe, their key differentiator is. And that's actually going to mean that they're going to have a much higher profit margin. As you can see, like I mentioned before, they want to be the forefront of when companies need to launch their product, come to Alibaba. When companies want to do business in China, come to Alibaba, right? When people want to order stuff from China or globally, come to Alibaba, And then they also want to offer the services surrounding that, right? And so as you can see, they've built this entire ecosystem, which they hope to continue growing users, and they're also leveraging. So 70% of their user growth actually came from the less developed areas of China, which is fantastic, right? Because then that helps them. So as you can see, they'll shop on Tmall and Taobao, and then they will then perhaps use Ant Finance, which is or Alipay, right, to pay for their goods, or they'll perhaps might get some micro loans to fund the goods, and then why not just watch some videos and shows while you're at it, and why not order? So Ulama, which is their food ordering, it's kind of like Uber Eats and whatnot. It's massive, right? So they're building this whole ecosystem where people who want to transact with each other, all they need to do is just come to Alibaba basically, and they'll handle the rest, right? And so, as you can see, this is their ultimate plan. Their ultimate plan is to, well, you can effectively call it world domination, but they don't want to own everything, but they want to enable everything. And I think that's absolutely powerful, right? So become so sticky to these brands and these people that basically they can't do business without Alibaba. And I think that's powerful, right? Whereas Amazon is, Jeff Bezos says is your margin is my profit, whereas Alibaba just says, look, we just want to help you guys do business. Uh, you know, getting it to the point where people basically can't do business without Alibaba anymore. So it's almost like, a indispensable good, right? Kind of like you've got your Visa card and we all pay with Visas. Alibaba's, oh, well, why don't you just pay with Alipay, Oh, you wanna buy something, come to Alibaba. You wanna sell something, come to Alibaba, right? So they're basically, they want to facilitate everything. And I think that's massively powerful, which is very underappreciated by the market at the moment. Okay, guys, so let's now move on. So we talked about Alibaba's superior business model. So what I wanted to do is I want to do a quick competitor analysis and why I think Alibaba's way ahead of the game, and why these competitors are sort of not too much of a threat to Alibaba, right? So JD.com, and again, great business. So JD.com, great business, growing, but not as fast as Alibaba. Their GMV is about sort of 1/3 of what Alibaba does, but the thing is they don't sort of have any other business units. And what's most important that I think we should focus on is they can't consistently turn a profit, right? So they're effectively like the Tesla of retailers, and so for all my Tesla watchers who are bullish on Tesla, sorry guys, but I think JD is sort of the Tesla of Chinese shopping, right? So as you can see, they can't consistently turn a profit, and this is why I think Alibaba's business model is better, because Alibaba's business model is profitable. It's their core business model. It's profitable, which then allows them to invest in things like cloud and the ecosystem, stuff that JD can't do because they're scrambling to become profitable themselves, right? And as I wrote here, it restricts a company that can't turn a profit, restricts their ability to invest in itself. And in order to continue doing business, they either need to dilute shareholder value by issuing capital, or they need to raise debt, right? And none of this is good. And the same can be said for Pinduoduo, right? So people think, oh man, this Pinduoduo, Alibaba's screwed, right? They're going to get, everybody on board. But as you can see, these numbers are atrocious. I mean, they're just bleeding and burning money, just lighting money on fire quarter on quarter, year on year. And I really don't think they're a threat. And you can say, okay, they've grown to 300 and something odd users, but again, they're not profitable. And if you compare this with what Alibaba does, Alibaba's core business unit is very profitable, which then allows them to go on these ventures and grow, which is sustainable. And this is why I believe the business model is different. And I know that there are quite a few Pinduoduo bulls out there who'll say, well, no, look, Jack Ma is scared of them becoming a dominant force, right? So what I've done is I've got you an article over here with a classic argument that Pinduoduo bulls have, right? They say that, price is the most important factor. Customers want the best deal possible, right? And so, these people from tier 3, tier 4 cities, they're not willing to spend. They want to pay less, right? But paying less is not necessarily a downgrade. And the irony here is that, they've said that Alibaba and JD have ignored the more rural areas, which, as we saw before, it's not true, because 70% of Alibaba's user growth in 2019 came from the tier 3, tier 4, tier 5 cities. But okay, so let's look at the argument, right? Let's look at value argument. So let's look at bang for buck. And I would actually agree with the author, but this is the funny thing, right? So the author says that bang for buck is the most important. Absolutely. Value for money, right? But if you're not getting any bang for your buck, then there's no value for money. And so and so this is the funny thing, right? So Pinduoduo attracts merchants by charging zero fees, okay? So you think about merchants who can't actually afford to advertise their services. Like, should they even be in business, you know? And how dodgy and shitty do their products have to be that they can't even afford to advertise it, you know? So surely if you're passionate about your product, you could put some money into backing it, right? And so that's the exact reason, right? So the fact is, yes, value for money is important, but Pinduoduo merchants do not deliver value. And as you can see, the complaints ratio on the platform is massive, and the users have given it a 1-star rating. Okay, and so the irony here is that the CEO of Pinduoduo himself says, look, we don't actually want to grow. We actually want to retain users. Okay, so they've invested about $24 million into sort of dealing with counterfeit goods and, you know, dodgy transactions, right? Which then raises a question. Okay, so if they're going to do that, and all of these shady small vendors are gone, then what's left? And what's the difference between Alibaba and JD and Pinduoduo? And why would people not go to Alibaba or JD, which is known for quality, right? You know, reputable businesses instead, and go to a shady shop? And the thing is, they, you know, the author still hasn't even answered the question as to, well, how much does Alibaba and JD invest in, you know, into this area, you know? I can tell you it's a lot more than $24 million, right? And the reason being is, if we actually look at it, right? Look at what Alibaba does to ensure that their goods are of quality, okay? So they've got proactive online monitoring protection. That's going to cost money because you need people to do it. Product buy and test program. So they have to actually buy and test the thing before they sell the thing. That's going to cost money, okay? Offline investigations. That is going to cost a lot of money, okay? And then number 5, litigation. So if any of you guys are familiar with how much this stuff costs, it's going to cost a lot more than $24 million. And Pinduoduo just does not have the funds to do that. And so they're going to lose users eventually when people realize that it's not all about price. It is about value. So now, the author of this article also makes another argument and says, well, actually, Jack Ma's scared because look at all these people leaving, you know, Alibaba, Taobao, Tmall to go to Pinduoduo. And it's funny because he's actually contradicted himself, okay? So let's look at this. 50% of users who uninstalled Taobao in December moved to Pinduoduo, while 78% of users who uninstalled Pinduoduo went over to Taobao. Now, by my calculations, Alibaba's winning by 28%. So if you keep losing 78 but winning 50, then you're at a net loss, right? So not too sure where the author's logic is there. Okay, and so as you can see over here, now this is comments from Alibaba. So might be skewed, but I don't disagree with this, okay? People are looking for value, i.e. what they buy is of quality, it's reputable, and it's going to be good, okay? And so if you look at China's imports rising year on year, and then if we then match what we saw earlier on in the video with the middle class increasing, disposable income increasing, all of this increasing, you'll actually see it makes sense that people aren't just wanting the cheapest things, they want the most bang for buck value things. So I agree with the author. The buyers want bang for buck, and that's why they want to get as much buck as what they pay. And if you pay for a shoddy product, you get no bang. So he's effectively contradicted himself by saying Pinduoduo is a competitor or rival to Alibaba, right? Okay, so final thing before we move on. As you can see, you know, Alibaba gets every merchant to put some money into the Consumer Protection Fund, which gives them an incentive to sell good products so that they don't have to pay money to refund, okay? So this in itself is a cycle that propels itself forward, okay? And so again, my argument is, what person selling their stuff will not back their stuff? Well, people selling really dodgy stuff. So pretty logical. Okay, guys, so here are my concluding remarks, okay? When you buy Alibaba, it's important to view that you're buying a whole ecosystem, okay? You're effectively buying China as a service. And again, they want to be the people that enable people who want to do stuff in China to only go through them, okay? And the example that I gave is, you want to launch this luxury brand, don't worry about hiring any people on the ground. Don't worry about starting your own store. Alibaba will do it for you, right? That's massively powerful. So, and you know, And that's just one of the things, okay? And then you look at everything else they've going for them. So I encourage you guys to do your own research and have a look at this article by AliZilla. Now, again, this is written by people who have an interest in Alibaba, so take it with a grain of salt. But really just think about how powerful the ecosystem is that they're building, and really just ponder that for a second. And you'll see why I'm so bullish on Alibaba. And of course, have a look at Jack Ma's video on the differences in business models between Amazon and Alibaba. Now, I genuinely believe that in the long run, Alibaba is actually going to win, because when you want to own everything, and like Jeff Bezos says, right, your margin is my profit, you make a lot of enemies, okay? And people work with you because they fear you and they have to, not because they want to. Whereas what Jack Ma's doing is he goes, I just want to be everybody's friend. You want to be like Amazon? I'll help you be like Amazon, right? And that's the fundamental difference in their business model, and which I genuinely believe in the end that Alibaba's going to come out on top. Okay, so guys, that's the end of the video, and I would greatly appreciate it if you guys can leave a like, drop a comment, and hit the subscribe button. It really helps the channel grow, and it helps me to make more quality content like this for you. So until then, happy investing, and I'll see you in the next video.